Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, September the 17th. The year's 2021. Let's talk trading. It's time for the weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. And just a reminder, every time you trade, make sure you have your risk management in place. Don't lose any more on any one particular trade than you're willing to lose. So for the week, all the gaps have filled. We are 71 pips below the weekly open at present, 31 above the weekly low, and 132 below the weekly high. So you can see from the chart, we broke out above the previous week's high, returned, and then dove through, and now we're in the lower weekly wick zone. Also, you might note we are back in the opening range for the month. In fact, we're only 2 pips above the monthly open at present. We broke back into the opening range for the week and fell below it. And actually, we're right now right at the monthly open. We are 112 pips above the yearly open. And we are in the inside bar, the weekly inside bar that occurred 3 weeks ago. Yesterday, we broke out of the inside bar that occurred 9 days ago, the daily inside bar. We just hit the psychological 50 level. We broke out of the previous day's low back at 64, 62 pip range on the day, only one pair over 100. And the buy zone, we took out the previous day's pivot. As you can see, we're below the weekly open and the daily open. So buy zone traders here have been paid off and are still getting paid off. Green rats should be preparing. Let's see, we've got about 6 hours or so, no, 5 hours left in the trading day. It's Friday. So we'll see if we can get price to come back out of the rat zone, which the level is at 67, or rather 65.7 for the smart rat and 70 for the original rat. So that's a 4.3 pip difference. That's basically, a little over 20% of the rat zone. And you can see here the red rat, the smart rat's at 94.2. The original rat is at 92. So you can see you've got about a 10% difference here. And those differences aren't that significant, really. It's just a rule of thumb. Now you can see we broke below the monthly pivot. And we're right just below the monthly open, touching the daily S1 for pivot traders. And you can see here the pivot trading plan. Price near the pivot was calling short, and that's what happened. Looks like we've got a big H4 down candle here for the day. Once again, we took out the pivot, so the only missed pivot we have is back on for this year is on June 17th, which is right here. Weekly, we took it out, And monthly, we've been crisscrossing it at present. Wick zone in and out of the lower wick zone of the previous day's candle. You can see here we broke out of the downside this hour at 64. And this is where it gets interesting. The range so far, 163 on the week, and last week's was 162. So pretty much the same, and the previous week was 161. High minus the previous high, we broke out by 24 pips, and low minus previous low, we're away from it by about 24 pips. High minus the close, 162 for weekly rat traders, and close minus the low, only 1 pip off the bottom at the present time. So once again, green rats, get ready for a signal. And if you look at what happened yesterday, it's like we got 3 candles in a row here heading down, and then the bounce back to close out the day. So maybe it'll be a repeat. Don't know, we have to wait and see. And remember, if price gets in the 40s, that's what I like to call the launch pad. Look for it to go back up, usually to about the 60 level. And you can see here, I still have this set for the psychological trading. And if we bring back the daily candle, oh, got that on auto again. Turn off the auto adjust. What that does is if you go to the higher time frames, it spaces them out so they don't get all crunched up. So rather than space by 25, I think it would space it by 100. And we just broke into the 40s here, right through the 50. This hour range 28, previous 34. So obviously something's going on, moving price. And on the daily, you can see we put a 1 ball in. But the whole point of this is we broke above the 3,800 level here, which daily candle would have been green, opportunity to take about 10 to 12 pips. On the short side, you can see we broke below the 75, which would have given us a chance to take about 25, 27 pips at the moment. 20, yeah. Once again, simple trading at the horizontal line. And as I've said before, once you put the trade on it, the reason doesn't matter. All that matters is what happens next in the market. And sometimes traders get so hung up on their pinpoint precision entries. And yes, you want to try and get it right at the level, but sometimes it's, it's hand grenade precision. It just has to be close. But traders have to understand that not every trade is going to be a winning trade. And there's really not much you can do after you put the trade on. except to watch and be prepared to take profit if you get the chance. You can see here on the M5 chart, it's just moving price down, just like it did yesterday. And it looks like the rate's about the same. So you see we have a 3-ball here on M5. And we can watch what happens with the next M5 candle. You can see we've got a new low right here, lower high, and the indicator moved down. Oh, and somebody was asking me what was the indicator that I was using that followed the price. Let's see. I don't know if I have it turned on any of these charts. Yeah, this one. And that indicator in this particular case would be the smart rat zone. But normally it's TROHL5. So we go here. What we can do is show close, set that to true. And it follows. But since I have 34 bars, it's going to show the last 34 closes. But if you just have it set to the current, then it will just show, and 1 bar, it will just show you the 1 bar or the 1 close line. And the distance from close to close is always going to be 0. And now what you can use this for is price usually likes to go from close to close. When it comes back up, you can see right here, there was a bunch of sellers here. So price hit it, barely cracked it, and then returned. And so in this particular case, you can see it went above 1, 2, 3, 4 lines. So if you're in a trade and you have these clotheslines and price stalls at a clothesline, sometimes that's an indication to exit the trade, take your money off the table. So green rats, as you can see, price is still pushing down. So let me reset this TROHL5. Show close false. And let's just see what. And I had this set for current, for high or low, low or high. Normally when we're scalping or intraday trading, we set it to 1. And I forgot to change one other thing. The period we want to use to do all the calculations would be the 1 minute. And so you can see here we're crossing 37.47, which is the M1 high or lowest high right there. You can see it touched it, and now looks like we might start heading north. And that's how that works. So fellow traders, I hope you had a profitable week. I hope you enjoyed the little by little that Walmart and I talked about. And I wish you a fun and safe weekend. So when you come back to trade, just remember, it's not what you trade, it's how you trade it. So As always, drain the banks. This is the Rumpled One, over and out.